What's up, guys, and welcome back to my channel. So today I'm going to be talking about moving averages, right? How you're supposed to use moving averages correctly. As you can see, most of the times all the strategies that I post, I've got my moving averages on. Why? Because they are very powerful indicators that I use, right? So there aren't like other indicators that lag or that averages. You can use them for quite a number of purposes. They can act as a support and resistance and all that stuff, right? So as you can see on my chart, I've got two moving averages. These are the main two that I usually use, right? So I've got the first moving average is period 50 shift 0 method exponential apply to close, right? And as you can see, this is the black moving average on my chart, right? And like that, right? The second moving average that I use is the moving average period 200 with the exponential applied to close. Then I just pay for step one on my chart, right? So personally, I use the exponential moving average, right? I don't use the simple. Why? Because I am trading indices, right? And exponential has got quite some advantages, right? Because it reacts faster, unlike the simple moving average. If you want to know about all that stuff, I will leave a link in the description down below and you check it out, right? So what am I saying, right? So on the moving averages, right? The moving averages, first of all, they act as dynamic support and resistance. So we're saying instead of you drawing your horizontal support and resistance, instead of you drawing your diagonal support and resistance, those are the trend lines. So instead of using the horizontal lines and the trend line, you just set your moving averages, and they can act as a support and resistance for you, right? So in like this case, right? So let's like this, right? So right here we've got right? So right here we've got right? The market goes up, right? Rejects over here. So it creates the resistance over here, right? When this resistance gets broken and the market pushes back to it, right? So as you can see, this 50 moving average, right, in this case, is acting as a support for this resistance level, this support level right here, because it's a broken resistance. It now acts as a support. So that's what I'm saying when I say dynamic support and support and resistance, right? So how are you supposed to use to use moving averages, right? So moving averages, we use them so like here, that's what I was saying. It's just a previous example. It's a lot was for a buy, and this one for a sell. And the market rejects over here, creating out support. And when the support gets broken, when the market comes back to it, now it says as a resistance. So our 50 moving average again is acting as a resistance in this case. And as you can see, the market went down, right? So that's how you use that's why I use moving averages on my chart, right? So they can also highlight positions, resistance and support that you cannot see, that's not visible to your eye, right? Although there is support that was broken over here, right? So right, as you can see, most of the times when the market pulls back to the moving average, it doesn't react exactly at that point, right? Why? Because these are just an estimate, right? They don't react at that time, right? As you can see, most of the time it looks like it's broken the moving average, then it continues going up, but it just shows you that around this range, around the range where there's a moving average, there's a support or there's a resistance. So you don't just use them as a fixed point, just like how you use support and resistance, but you have to use them as considering the whole range that the moving average is in, right? So as you can see right here, right, it seems like it broke the 50 moving average, but it later rebound and continue going up. So whenever the market touches the moving average, the reversal will happen immediately. It doesn't happen like that, right? So that's generally what you have to know, right? And then so you don't have to enter immediately, right? So So you have to wait for the what? For a candlestick confirmation, right? So you have to see what type of candlestick confirmation is being formed over here, right? So for that, that's when you'll be using what? The higher time frame, right? So we'll be using what? The 15-minute time frame mostly to what? To see the candlesticks that are being formed at that area. So let's go back to our 5-minute time frame, right? And let's see maybe this example right here. So let's highlight what? Around here, this region right here, and let's highlight this region again, right? And let me highlight this region, right? So let's go to our 15-minute time frame and check which candlesticks were being formed in that region, right? So as you can see right over here, there's a formation of what? This candlestick, straight candlestick with what? With many wicks, right? It's showing what? Indecision, right? And after that indecision candle, right? You can see an engulfing candle right here, right? An engulfing one, a red candle right here that follows next, right? So this is a further confirmation that we'll be selling, right? So you can take your sell position over there, and as you can see, you went deep into profit, right? So that's just another method that you can use, right? So we've got another candlesticks right here, right? So as you can see, we've got a red candle, right? And after that red candle, we've got a huge green engulfing candle, right? So after that engulfing candle, you can enter your buy, and as you can see, you went deep into profit, right? And then this candle, the candle that I highlighted over here, right? As you can see right over here, right? Let me use my pencil, right? We've got what? A doji candle, right? After the doji candle, another strong engulfing candle to the upside, right? So you enter over there, and as you can see, it went up into profit, right? So it's quite a simple strategy, guys. You can use the moving average retest on the 5-minute time frame, right? And on the 15-minute time frame, right? So generally how I use it, right? So I personally just like to enter in the direction of the 50-200 cross, right? So in this case, the 50-200 cross was crossing for an uptrend, right? On the 15-minute time frame, right? So I'm looking forward for my buy trades, right? So I dropped down to my 5-minute time frame, right? So that's when whenever the market pulls back to the 50 moving average or the 200 moving average, depending on the time, right? But when it pulls back to the 200 moving average, most of the times it forms a W, so you can enter on the second leg, right? But I use the 50 moving average most of the time. Why? So after the 50 moving average, pull back to the 50 moving average, cross showing an uptrend, right? So right here I take my trades after the candlestick confirmation, and as you can see, it's quite a profitable strategy, right? Right here, we got a crossover to the 50 moving average crosses down for a sell, right? Let's go back to the 50 moving average, right? For the candlestick confirmation, and I take my sell opportunity, my sell trade, right? So this is just a simple strategy that you can use to aid other strategies, right? So you can combine the strategy with price action or with order blocks, supply and demand, right? To make your trading more profitable, so that you can get more profits, right? You can also use other indicators like the RSIs, the MACDs, like stochastics, so that you can aid the efficiency of these strategies, right? So that's just it for this video, right? And I'll show you more about the moving averages on the next videos to come, right? So if you've got any specific questions that you want to ask, any suggestions, and anything that you want me to create a video on, leave a comment down in the comment section down below, and I'll address that issue, right? So if you like this video, hit the thumbs up button, and I will greatly appreciate your support. And if you're new to this channel, please consider subscribing. Thank you, guys.